Allocation, 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 allocation. Allocation, originally a term from economics, and allocation refers to the distribution of existing resources of different blah, 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 blah. Basically what you're doing, you're taking your money and you're going to be spreading that out into different places to maximize the amount you make and to lower your risk. Now, using the wealthy investor approach, because it's easier to learn from somebody else, try to figure this all out on my own, here's 3 different areas we'll be putting allocation money into. Now, the first is the Dow Jones Index. That's the top 30 companies in the New York Stock Exchange. It grows at an average rate and also pays a dividend. And what's a dividend? Well, a dividend is when a company, an established company that has a proven track record, like the Visas, the MasterCards, the Disneys, well, they're going to pay you a portion of their profits every 3 months. Now, the second is the S&P Index. That's the top 500 companies in the New York Stock Exchange. They have a higher growth, but they don't pay a dividend. And the third one is trading, using Dow and S&P stocks to generate monthly income that is used to build the positions in the other 2. So the market gives you money to invest with when you learn how to trade. That's pretty cool. Okay, now how much to put where? Okay, the percentage, well, of course, this isn't my idea. I didn't come up with this. This is this guy's idea. And usually you're going to see allocation in the form of a pie chart. But where there's 3 different parts, well, I might as well just put it inside the triangle, right? So that's what it is, a third, a third, and a third. You put a third Dow stocks in your account, a third of S&P, and then you have a third for trading. Okay, you want to see some examples and some real numbers and why this is much more powerful than just trading alone? Okay, I'm going to be using Yahoo Finance. It's a free app. You can read it on the website for free, so you can look at the same information I'm going to show you here. Now first, we're going to start out with the Dow stock. And this is Apple. You've all heard of that one? Sure. And I'm going to show you here just like a year ago. I'm going to put the 1 year. And I'm going to give you an idea of what the percentage is. So it's been up 30% in 1 year. So that's, I'm going to put that right over here, 30%. Okay, next we're going to look at the S&P. And give an example there is Square. And for the 1 year, a year ago. And you're going to look at, 66.54 is how much it's grown in the last year, 66%. So that's going to go there. Okay, now trading. Last year I did 69%, so I know that's possible, but we're going to go half of that and just say 30, just kind of lowball a little bit and give us a number right there. So yeah, you're looking at 126% annual ROI, which averages about 12.5. Not the 5%, but 12.5 this year. Right, so these are the numbers I'm looking at. I haven't done these yet. This is September 2021. These are just projections, and this isn't something Tyrone puts out. He doesn't actually say these kind of numbers, but I went and did the research, and this is kind of what I'm looking at. So yeah, it does seem a little out of reach, but you know what? It's only because we've never seen this before, and that's why we don't believe it's possible. 1, 2, 3 punch. That's right, because not only are Dow and S&P stocks going to be giving you growth, also going to be paying you dividends, but on top of all that, while they're doing that, they're going to be able to come together and you're going to be able to use those shares for something called leverage, which is going to give you another huge percentage to add to the rest. Now, leverage in the stock world is called margin, and you can check out the video I've made on margin to get more details with this to really show you what's going on. And thanks again for sharing and for subscribing and for liking these videos.